Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino Booth.
At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart? And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate.
President Trump just moments ago at the White House announcing his long-awaited plan on reciprocal tariffs. Welcome back to Balance of Power, an extended edition here on Bloomberg TV and radio. Joining us now for analysis is Danielle DiMartino Booth. She is CEO and Chief Strategist at QI Research. So, Danielle, just to reiterate what we've learned this afternoon, a 10% blanket tariff applied to U.S. trading partners, though there's an exemption for Canada and Mexico, which are dealing with their own regime. On top of that, a reciprocal tariff rate on some of our largest trading partners. For example, the rate on Chinese goods will be 34%. How close to the worst case scenario is this?
First of all, Kayleigh, thank you for having me on this afternoon. And I think that because there was nothing truly consistent about this rollout, each country truly is affected differently and to a higher degree than what I think many were factoring in. I do think that this is on a spectrum towards the worst end of what was being anticipated. We're seeing that in the price of gold. We're seeing that in the benchmark 10-year Treasury yield as well. And for heaven's sake, certain companies like Restoration Hardware, that's now down 23% in aftermarkets trading.
So what does this mean for companies that don't know exactly how to react? It's unclear how long these tariffs are going to be in place. Do you start moving supply chains now? Do you start investing in reshoring manufacturing facilities? What are you hearing from companies about how seriously they're taking the long-term impact here of this tariff regime?
Well, you know, we've just seen a raft of regional Federal Reserve surveys, and all of them showed depressed capital expenditure plans. And that's a huge reversal, by the way, from what we'd seen as recently as December. There's such a high degree of uncertainty that I think many American companies are, and rightly so, paralyzed right now. We do hope to hear more carrot and less stick from Treasury Secretary Scott Bessent. I hope that some clarifications are coming here in a matter of days in order to reduce the fear factor among companies. Of course, the United States economy has survived declining consumption in the past, but we have never not gone into a recession in the event.
What needs to be clarified, though? What detail did you miss today from the president?
Well, I certainly think that we missed, as you pointed out, the longevity, the duration, how long these tariffs are going to last. And prior to being confirmed, Treasury Secretary Bessent also stipulated that there would be a several-year on-ramp period during which American companies were given a grace period, if you will, to reshore. You can't pop a factory up overnight, and it takes a very long time to move supply chains. I think that there would be a lot more certainty if American companies knew that there was also going to be a continuation of friendshoring policies such that they could continue some of the developments that they've started in Canada and in Mexico.
Well, we just got the formal fact sheet sent over from the White House. It reads in part, Danielle, these tariffs will remain in effect until such a time as President Trump determines that the threat posed by the trade deficit and underlying non-reciprocal treatment is satisfied, resolved, or mitigated. So I guess the timeline is a little bit unclear if those are the terms with which we are thinking about these tariffs coming down. In the meantime, what effect would you really anticipate that these tariffs would have in the immediate term versus the more medium term, given all the front loading and building of inventories we saw companies engaging in anticipation of an announcement like this one?
And you're right, Kayleigh. In fact, the Logistic Managers Index that we saw released yesterday showed that there is now an unwanted, involuntary inventory build. The ISM report that came out yesterday said that many companies were beginning to cancel orders or delay purchases. And my greatest fear is that because of the known and that is that we are going to see higher input costs, and the unknown, we don't know as a company what our pricing power is, that companies are going to continue to be preemptive in cutting costs ahead of these tariffs being imposed. We've already seen in the first few months of this year an acceleration of private sector layoffs. Challenger Gray and Christmas announced 172,000 layoffs for the month of February. Only 62,000 of them were from the public sector. So if we see companies continue to try and protect their margins preemptively, that's going to come manifest in the form of further job cuts.
How nimble is the stock market right now if we get better news in the days ahead? If some of the countries that have been targeted with reciprocal tariffs, as the president calls them, offer concessions, maybe some of this starts to come back, as Scott Besson has suggested. We start high, then we start pulling things down as the concessions roll in. Is this a market that's flexible, nimble enough to respond?
Well, I certainly don't think in the immediate term that this market is going to be nimble. There was a lot of short covering going into this formal announcement that's just come out. And we're seeing now that there is, again, a worse than expected, a deeper than expected, and a wider than expected raft of tariffs that are going to be imposed. And for now, the markets remain very skittish. And I would venture to say we're going to see another interim term decline here in the stock market.
Well, we certainly are already seeing that if you take a look at the way ETFs that track the major indexes are trading in after hours. QQ here right now down the better part of 3 percentage points. Danielle, before we let you go, obviously this all puts the Federal Reserve in a tough position. We have seen difficulty dancing around the tariff question on the part of Fed Chair Jerome Powell. Do they have any choice here except to stand pat and wait to see what happens a little bit longer? And does that run the risk that whatever move they make next, it's going to be one that ends up being too late?
Well, Kaylee, since you mentioned that, 66% of Americans, actually 72% as of University of Michigan's final read, expect a rising unemployment rate. We've seen 5 straight months through the Conference Board of Americans anticipating a rising unemployment rate. So through the prisms of 2 very long established surveys, most Americans expect for there to be a rising unemployment rate. At some point, I think the Fed may have to take its eye off of the nebulous matter of tariffs and be attentive to its second mandate, its labor mandate.
Danielle DiMartino Booth, great to have you with us, CEO, Chief Strategist, QI Research. Just moments after we got the information from President Trump, we're keeping our eyes on the markets clearly here. Futures just opening in the United States, or will actually shortly here. We're going to bring in Romain